All right, guys, welcome back to the channel. I'm looking at the 18-year cycle today along with Bitcoin and the reality of the bear market setting in, or in many cases for people, the unbelievable reality that a bear market could be setting in. Now, of course, I've been covering this for many months, and I'm just showing you the indicators that I'm looking at and then give you the reasons why I think the market is going a certain way on a macro scale. The day-to-day stuff, that's a little trickier, but we're looking at the long term here. And we don't try to take one direction and one approach because that typically gets people absolutely destroyed. We need to be flexible with where the market is going, with the indicators, with the signals, with what the charts are saying on a day-to-day basis. And for the longer term outlook, these take time. They take time to build up. You see it as a bit of a process to building a top or building a bottom. There's always a case for either. And it's at the end of the day, it's up to the individual to do what they want with their money and decide which way they think the market is going. And I think that's the beauty about what we do on the channel and what you guys have done with your own money, with your own investments, and what I see from you in the comment section, or at least from what I can read down there. Because taking one specific approach to the market, as I said, pretty much gets you destroyed every single time. And if you don't move with the times, if you don't adjust, well, again, that's the outcome. So with that in mind, looking at the 18-year cycle today, as I said, with Bitcoin, I think we're somewhere around this top. And over the coming 12 to 18 months, I think we could start to see this thing come the other way. So basically drop off the side of the cliff. And that's basically where we get to that recession crash. Now, dropping off the cliff, I don't think that's going to be very noticeable until we get to 2028, perhaps. We've got to see how things progress by the time we get there. But it's not going to become apparent to the public until there is some sort of catastrophic event, which typically is the time in the markets when it's almost too late. Yeah, sure, you could probably save a few bucks on the way down, just like what happened in 2008. It was September, mostly October, where you saw that absolutely destructive crash on the markets and where everyone was starting to think, well, the game is over and they're all going to be fearful for their lives. Within 6 months of that time, the low was in. The market had already been going down for 12 months. This is the US stock market, 12 months. And 6 months later, the bottom came in at that point. So we really got to be on the ball, watching the markets, at least in my opinion. Of course, everything on the channel is my opinion. I'm watching it day to day, week to week, month to month, trying to put that picture together, because it's usually at those times, as we know, when most are extremely fearful, you're probably somewhere around that bottom. And the same thing happened in 2022. We had a very significant low in June 2022. For the stock markets, it came the next low, which was pretty close to the other low, was in October, and for Bitcoin, it was in November. So around the price point, roughly the same time frame, 4 or 5 months, you basically had the lows in and the market was ready to go again. But as we know from 2023, 2020, half of 2024, most people were still looking for a recession. The word of recession was absolutely everywhere. And so I bring that up and talk about it at the beginning of the video, because 2026, I think, is going to be a very difficult year to trade. I hope that the masses and the media are going to be saying it's super easy, because then that could make it a little bit easier for us. If everyone's thinking the same way and we've got this positioning where things are great again come second half of 2026 and the markets are just heading up, it's this easy to make money, then I think it's going to be much easier to figure out where that top is for the 18-year cycle, for the stock market cycle, for maybe if Bitcoin gets another run. And so that leads me to the next point of not getting too complacent here with any sort of low that we may see in 2026. So that's essentially what I want to cover today as we watch the signals and the charts unfold to where they are right now. I think in the medium term, we've got a bit of a relief rally happening, but I think in 2026, it's going to be the difficult part where we potentially see more volatility, a low for Bitcoin, and then maybe a final run. Whether it's to a new all-time high or just to a significant high, I don't know. But I'm not going to just chuck the towel in here and say it's all over for another 4 years, see you then, because in 4 years' time, well, that's 2029, could be much, much lower. We could have seen another high in between that. That was a very tradable range that, can have some money made in that time. So yeah, lots of things can happen through that period. So the everything bubble has basically continued to be the everything bubble. But as we get closer to the peaks, the bubbles don't all pop together. I think that's a bit of a misconception from many that think, well, when the bubbles, when it's over, pop, they all come crashing down all together. At least that's not how I've seen the markets. It's basically like capital rotation. Might be going from Bitcoin, so the riskiest stuff, they'll start to move their Bitcoin, which is this orange line here, take some profits, start to move it into cash. Maybe they're moving it into the next latest, greatest thing, AI, tech stocks, and you're seeing the stock market still heading up, whereas Bitcoin's going down. The markets have been putting, or investors have been putting money into gold. This is the yellow line here, the nice golden line. It's been running up, but I think it's possibly getting time due for a consolidation. Now, consolidation can still mean slightly higher highs. We've seen consolidation to the upside, but it's just a slower period in terms of price appreciation compared to where it's come from. And the biggest one here, which is your white line, you can see XHB, that's our home builders ETF, that actually has not put in a new high. Now, it hasn't broken down the lows yet, and we're basically in this tightening trading range. So if it does break to the highs, you can see the white line here. It's this reading on the side. It's at 107. To the upside, it needs to break roughly 125 to put in a new higher high. But through this entire period, the home builders, which is one of the leading indicators on the 18-year cycle, I say one of them because we need a few more charts and indicators to come together to give us that final, bell ringing there. It didn't put in a high when the red line here, the S&P 500, that put in a high after the tariff crash lows. So if I zoom in, it's a little messy, but you can get the idea. The white line put in a lower high. Orange line Bitcoin put in a high after the April tariff crash low. This is the April low there. You can see on the chart, I'm pointing to it right there. All these markets load. The white line did not put in a new high. Bitcoin new high. Red line S&P 500 new high, and the yellow line gold new highs. And it's actually put in a new weekly high, new all-time weekly high. So it's close to the highest in history. So in terms of Bitcoin, bringing it back down to the shorter term here, I think we're on some sort of path towards a relief rally after talking about the potential of the top coming in as we began to hit 116K. That was a double top back in mid-October. And then it started to break down. And I posted to the members on the 3rd of November. You can see there, obviously, I've got the Australia time. If you guys are from the US, you'd obviously flip it around, but you can read it right there. Top left, 3rd of November, looking at this as being the Wyckoff distribution pattern at the highs. 116 double top, breakdown here into phase E. A bit of a weak, feeble rally as the Wyckoff analysis suggests. There's a schematic. And then on this red day right here, that was where things started to escalate. The 3rd and then the 4th, which basically broke the trading range low, and then it took a little longer to get to the sign of weakness, SOW in D. And so from there, we got the extreme fear. We're still in extreme fear. More and more extreme fear continues to pile up here for the, for crypto fear and greed index. And you can see we really have not gone above 30 in the last month. And if I look at a longer time frame here, if the sentiment remains this low for a considerable amount of time, we'd have to measure it. It's somewhere in the vicinity of 1 to 2 months. That typically shows that we're most likely in a bear market, at least a bear market in terms of sentiment. But then when you add all of these indicators together, it starts to paint the picture that it's going to take some time to reset the current sentiment of the market. So basically the momentum has slowed too dramatically to the upside to recapture the essence, to recapture the bullishness that we once saw 12 months ago. You know, November and December of 2024, there was some extreme bullishness in May and July, and then things started to die off after that October top. That was the last time we saw any sort of greed in the market, and there was extreme greed those two tops before, just here you can see on the chart. And so squashing things, basically grinding things into the ground for too long, normally results in the market heading down. We obviously saw May, June, July in 2021. That's a time that many people, or at least bulls, are still pointing to, and it could be right. You know, I'm just working off many of the charts and the indicators that I use on a daily basis that suggest to me that things are looking like it needs some time to cool off. That has been a really, really good sign. You know, that was the Wyckoff schematic, helped us get out of the market and at least de-risk the position at that time. Now, not to dwell on that too much because that's in the past, I want to look for signs that we're either in a relief rally here or this is going to be invalidated. Okay, so nice simple thing we're looking at is the 50% level. You can see on the bar chart here, 50% is around 103. And you know, I've talked many, many times about 108. So to keep the simplicity here, I'm definitely watching 108. There's been many previous support levels and previous rejection levels, at least on the way down as well. So above 108, that's really going to start to bring in the idea that maybe this bear market is invalidated and we're going to run to new fresh highs. That could get things really, really excited. If it begins to fail around that 108 or even anywhere below it, then we got further to go to the downside, and that's pretty much going to kill all of the remaining bulls that think this is another buy the dip opportunity. And now, like I've talked about in previous videos, there are many, many other signs in here. You know, I've got the huge list, some of the major ones that have called all of the turns in the past. We're looking at macro 50%. We're looking at overbalance in time and price. We're looking at the 3-day signal, which has called all of the all-time highs in this cycle, in 2021 cycle, and in the 2017 cycle. So I definitely can't discredit it, or, you know, not to look at it just because, you know, this time might be different. The point I'm making here, we're looking for this rally and then the correction. I think if this correction comes in and we finally find a base sometime in, say, you know, Q3 of 2026, obviously we'll be watching for things earlier because, well, the market's never that easy, of course. But looking somewhere around that Q3 2026, of course, 12 months from the October top, could be October 2026, which is technically Q4, but you get the idea. Then we got to see if there's enough time left in the 18-year cycle for another attempt higher, when most, I would say, have given up on the idea of any further upside for Bitcoin. And a lot of those dreams around the stimulus, around money printing, around QE, around rates getting cut, if that stuff all really dries up in the first half of 2026, you know, the new Fed chairman potentially coming in as well, all of that hope of the liquidity drying up, then maybe that's an opportunity where finally this is a chance for a low, and then whatever remaining liquidity is left, we get that next rally higher. It could be a relatively good tradable low. At least that's what I'm looking out for if there is enough time left in the cycle. And I say if there's enough time in the cycle because at the moment we have a few signals to say that we're getting close. But remember, this is a roughly 14-year move up. Therefore, there's not an exact date that the whole thing tops and it comes crashing down. As I said in the intro, we're talking about a process of a top. And I think that process of a top is happening now for the 14 years up. And it could take 12 or so months to get to the end of that process. Then it could take the public, the masses, another 6 or so months, 3 to 6 months, let's say, to figure out that things aren't so good, but they think it might be a buy the dip opportunity. And then before they know it, it's too late. And that's where you get the acceleration of the downtrend and some sort of catastrophe. Let's go with that word. Cataclysmic, anyway, I can't say it. Catastrophe, catastrophic event that is similar to 2008, where they think now's the time, it's all over, and there's no point in even going to the market. That is where we look for the next low, somewhere around that 2029, 2030-ish time for the 18-year US real estate and economic cycle. The stock market is generally before that. The stock market generally bottoms before that. Look at this, 2011, 2012, the low point for the US 18-year US real estate and economic cycle was around 2011, 2012. We had that higher low and things took off. For the stock market, you may recall, it was March 2009. And for the NASDAQ, I believe it was November 2008. So literally 1 month after the catastrophic event of October 2008, where Lehman Brothers went down and all sorts. That was telling us that tech was going to be quite strong and was going to lead us out of the low. So although there's a lot going on, there's a lot of possibility that, upside, downside, up, left, up, down, and sideways, right? I think we've got this movement higher. It's getting more volatile. When that correction comes, people won't see it first up and they'll see it too late. That's the time that we need to be very well aware that things are possibly going to turn around and we'll have further upside. Where does Bitcoin fit into all of that? That's the big question. I'm telling you what I think is going to happen, at least what I'm looking out for, and then I have to be flexible with how these events unfold. For all I know, we've topped out here and this thing just comes crashing straight down. And then for 2027, it's basically some sort of rubbish bounce. No one knows for sure. That's why we've got to keep on top of where things are headed from here and essentially navigate it the best way we know. And in terms of navigating it, right now for BTC, we're definitely seeing a much more balanced market between the traders. You can see at the top here, the long-short ratio, the positioning is basically 50-50. Look at that, long short 50.07, the short's 49.93. When this is the case, we normally don't see huge movements. We don't see huge liquidations, and at the moment, pretty well 400 million, 300 to the long side, 100 to the short side. We typically see much bigger moves when this long-short ratio, this positioning gets out of whack. And another reason for the decline here for Bitcoin, the realities of the bear market is that we are seeing a decline in the exchange volume. What we want to see for this next move, should this move happen like I'm looking out for roughly Q3 of 2026, we'll look out earlier in case some of these start to turn earlier, is a renewed interest in crypto trading in this daily exchange volume. This is a 7-day moving average. This is the previous peak, 2021. Look at that. Right in the tops there, that's May, that's when the market came crashing down. And then just prior to that was another huge peak in, guessed it, April. That was the other top. And then the market was breaking out through February, March into those new highs of 60K. Again, this cycle, March 2024, that was a $74,000 top. Huge push higher. It did not break the previous cycle top. Then we had another one here in November and December 2024. That was another big push higher, lots of interest. And since then, we've had lower highs. So you could look at the numbers on YouTube coming through. You could look at the views coming through. You could ask the neighbors what they're interested in, whether they're thinking about crypto or Bitcoin or friends at work or whatever. But essentially on the exchange volume, it's proof that people are not interested. They're not trading. Normally you need a lot more people in with a lot more money, or at least more people with small amounts of money, a lot of people with small amounts of money, and neither of those has come through. Daily exchange volume has dropped down. And this is the critical part that I think those bulls are potentially missing, is we've now broken all of those lows. Let's zoom into year to date. Lows in, this is American way. Is that August? September? Yep, okay. And October. That's the dating, the American way, putting the month first and the date. So we've broken those lows at 40, 42, 42, and 47, and now we're at 38. The next lows are roughly around 27 to 30 billion. It keeps breaking down. It essentially means less and less interest to trading the markets, which means there's a higher and higher interest to the USDT bull market, raging bull market. Currently it's 6% USDT dominance, and as I've been tracking for you guys for months upon months, maybe even in the years now, very similar to last cycle. There's November top. Remember, we were tracking these lows, even this low here in March 2024, hoping for a breakdown of 3.7%. That was going to give us the almighty boom into this $300,000 Bitcoin or cryptos to new all-time highs. None of it happened, and the pattern to the upside is very, very similar to what happened last cycle, just before we saw the relief rally for Bitcoin, the corrections for the USDT dominance, and then that final move there. Now, the other point that comes up is that we didn't see euphoria. There wasn't any of this major euphoria to bring in a top. And I've hit back at that a few times to say that was major euphoria. Let's bring up our Crypto Fear and Greed Index, part of the indicator suite. You guys can add this to your charts. And we had extreme greed in March. We had extreme greed in November and December. Sure, this top here, we had only a day or so in July, but it's not like we didn't see any extreme greed throughout this cycle. And just because everyone expects it on the final top, myself included, I was expecting at least something more than a day or two in extreme greed. It doesn't mean that the market is going to give us that. And so I think those who were able to navigate and to pivot sooner than others are the ones who fared better. That's essentially trading in general, right? I had a pretty good analogy earlier, if I can remember it. And it was along the lines of, giving life support to someone. They're in critical need of help. But if you give the life support too soon, you could do some damage. Maybe you cut their throat off, or they break their chest or something because you're trying to give them life support. But if you leave it too late, then they could die. They don't get the oxygen that they need. So you got to do it in this critical spot. Now, I don't know if that's a great analogy if you guys are doctors or emergency workers out there, but that's what I'm thinking of with the market. If you cut off your trade too soon, well, then you've basically taken the lifeblood out of the possibility of there being massive gains. But if you do it too late, like maybe here, or maybe it goes up a bit further, if you do it too late, then you miss out on all of those gains. So essentially killing yourself as well. So it's this really sort of sweet balance that you've got to be just watching the signs of life throughout the entire move. Sure, you could put it on a longer term basis and maybe look at the pulse every couple of weeks instead of every couple of minutes or a couple of hours like many do. And that could work just as well. You could see it on the weekly chart and jump into that position when you need to. Cryptocurrencies are also on that lifeline here. Actually, let me know in the comments, like and subscribe, of course, and let me know if that was a good analogy. Hit the like button. I should be able to check it from there. Okay, cryptocurrencies are also in life support. They're dead on the 50% level again. Ideally, for at least a relief rally, it bounces from this point, 572. Look at how it's been reacting to this level now for the last 3 weeks. Once, twice, 3 times, dead on that level. Need to see some sort of relief rally here as we put in lower highs for the total crypto market cap, excluding Bitcoin, ETH, and stablecoins. So that's a break above 920 billion, would set you in that driver's seat again for a new high. But as we see it, well, as the facts have shown here on the charts, lower high after lower high, and on the verge of a 50% breakdown, which is a very bearish signal to break the 50% level. Now, if that happens, the blue line here is your 200-week moving average. And I thought I'd just have a look at this today because the prior cycles have broken past the 200-day moving average. This is for the cryptocurrencies, right? And then by how much have they broken past the 200-week moving average? Last cycle at the low, not too much, about 26%. Still a lot, but roughly. Whoops, let's give another crack. Top to the bottom, about 21%. And then through the decline of 2019, when it had this next top, this was the big move higher, and then there was a big decline. The largest point was about 30% from the 200-week moving average. Then, of course, there's COVID, so we'll have a quick measure there just for the sake of it. It's 54% from the 200-week. So we'll look at roughly 20 to 30% from the 200-week moving average in a bear market. And then we'll look at the most extreme example for the 2022 low. So there's the 200 week moving average down to the low, about 38% underneath the 200 week. So if this is to be the case here, there is your 200 week moving average line as of today. 30% underneath it is going to be about $300 billion. And that's why I've got this white line here of 300 billion. Going to take us very close to the previous lows, very close to the previous tops. That could be where we see some sort of bounce here for cryptocurrencies. Remember, it's excluding Bitcoin, ETH, and stables to give you a broad view of the markets. And so in the process of the markets going down, it doesn't mean that the S&P 500 has to go down. Now, I've covered this many, many times before, where towards the peak, okay, internet's back, and we can see the orange line in the background here is Bitcoin. So towards the peaks of the Bitcoin cycle, Bitcoin will peak first. The S&P 500 also has some sort of top, but it typically happens afterwards. So Bitcoin tops, starts heading down into its bear market. The S&P 500 keeps running. You can see here, 2013, 2014, it kept running. It ran all the way into 2015 while Bitcoin was going into a 12-month bear market. Here it is on the chart, 12-month bear market, and this. Next one, you can see Bitcoin bear market, S&P 500 still heading higher. Bitcoin bear market 2022, S&P 500 also down, but it topped after BTC. Are we seeing the same thing again? Bitcoin topping and the S&P 500 still running. Maybe it's a bit more of a grinding process like 2013, 2014, and then everything starts to level out, have its corrections, and start to run again. So I'm watching this for 2026 to see if there's any sort of significant bounce like we've seen in the past. You get the low happen. The S&P 500 also keeps running higher. It's still in its move higher. Bitcoin's having a relief rally. That move is 50, 70, sometimes 100%. And you also saw it in 2014 as well. Gold and Bitcoin, similar thing here. Gold can be in a consolidative phase while Bitcoin is heading down. Bear markets, bear markets, bear markets. Again, I don't think it's a good time to be taking the eye off the prize, because there could be some significant moves in 2026 that are very, very good, very, very tradable, very good opportunities there. And I've got a few more charts here as well, but I'll just leave it with this last one. And this is leading into that Q3 of 2026. It's our XRP, ETH, and MicroStrategy, where in the past you've seen XRP run roughly 12 to 24 months, basically 1 to 2 years in any one direction. All right, if you have been following, you've probably seen me talk about this before. I think this is absolutely crazy when it comes to how accurate it's been. So I'm definitely keeping my eye on July 2026. There it is, low forecast Q3, because that would put the correction for XRP. There's a top in July. 12 months would be July 2026. And we've seen XRP basically rally from that point throughout its entire history. So about you got a 12 to 13 month move. Sometimes it doubles up on that move, in particular in bear markets. So that's a roughly 26-month move, basically 2 years to the downside, but halfway through you get this bit of a bounce. Is that bounce going to be enough to be tradable for Bitcoin? Is it going to be enough to push us to new fresh highs? That question cannot be answered until that time. Therefore, do you want to miss out on opportunities? I don't want to. That's why I continue to watch all of these signs coming through. Like and subscribe. Check out TIA. The link is in the top of the video description if you want to stay on board and monitor these markets with us. Otherwise, I'll see you guys back at the next video. And you've got the free reports coming out Tuesday, Wednesday, and Thursday on Bitcoin, the economy, and altcoins. Till then, take care. Peace out.